Anybody that wants to have money in the game would love a 4% per month return. But the funding companies will say you failed. So you have to just kind of disassociate from that and say, I'm going to trade well. I'm going to do my best trading. I'm going to learn how to trade a little bit under this pressure and see what it does. See if it can mold me. Diamonds are made under pressure, like it molds you into something great.
Welcome back everyone. Today I'm sitting down with Austin Silver. It's been a long overdue chat with him. I know he's pretty popular out there on Twitter, on YouTube, and everywhere else, of course. So Austin, how's it going today? Welcome on the podcast.
Thank you, brother. Like you said, long overdue. I'm really looking forward to getting into it with you, and I'm very grateful to be here.
Yeah, good to have you here. So let's kind of go back, and I want to hear how you began trading, because it's been, I think, a few years to trade, probably a couple of years, maybe more than me also. So tell us kind of how that began, how did you get into trading in the first place?
Sure. So the short story for me is I was an intern at a financial services company. And as I was trying to figure out if that was going to be a career for me, I found day trading. I had never really understood what day trading was before that. But because I've always been very entrepreneurial minded, day trading was something that was like super appealing. I didn't know the difference between swing trading, day trading, investing. To me, they were still kind of all the same. So I was very green thumb, very new. But I caught the bug because I was in financial services because I knew I wanted to work a job where I had flexibility with my own time. I didn't have a boss telling me where to do, and that I was building a business where I wouldn't have to work in it forever. Now, at that time, the financial services, selling life insurance and doing investments for people, that was the only way that I knew that was possible. But once I was studying for a test in the States, it's called a Series 7, so you can sell stocks and bonds and all that stuff. I found day trading in the study material for that test. And once I started to do more research into it, it of course was very clear from the jump that most people will not be able to be successful in day trading, but that never deterred me because I've always felt like if I put my mind to something, I'm going to get it done. I'm sure a lot of people listening can relate to that as well as you. So I felt that there was potential there. So then I started to just scour the internet, and this is like seven years ago now, 6 years ago. So I was watching everybody's courses, bro. I bought everybody's courses, I did the typical thing that people do. And I ended up coming across Mike Bellafiore about a year and a half into my study, into losing money consistently, not understanding leverage and all of that stuff. And with him, he put out that book, One Good Trade. And that really, it just clicked for me. Studying him and Dr. Steenbarger and a couple other people, I was like, I just need to build something or find a strategy that I can trade well. And at that point, I had not found one. So that's where I then went down the backtesting rabbit hole and started to build my first strategy, which we still trade today. So that was like kind of how I got into it. It was from looking at financial services as what it can do for me long term, but then seeing that day trading did the same thing and that my passion was more for day trading than it was for selling life insurance. I was 19 at the time. Nobody's buying life insurance from a 19-year-old, So it was much more appealing for me to be like, let me just maybe come back to this career when I'm 60 and I want to help a bunch of people and it makes sense because I have a huge network. But right now it didn't make sense. So that was why I was like, let's just go full in on the trading and see if we can make it work. And at that time, there was no funding companies. There was none of that stuff that I was aware of. So I was off on my own, trading my own money and just trying to make it work. So that's kind of how I got into it.
Interesting, definitely a different field than you were before. So it looks like you were creating your strategy from a very early stage. Was it the decision you made to create your own thing? Did you kind of felt that you had to go that way? Because a lot of people spend time copying other people's strategies. They want to like take something out there that already exists and do it and copy it. How did you decide to go that way?
That's a good question. I feel like, and nobody's ever really asked me that because, of course, you can take other people's strategies and trade them. But I felt like, I mean, of course, this is hindsight now, but looking back on it, I never really had a strategy or had found a strategy that really worked well for me. The way that I ended up building my own strategy was looking at the chart, using specific indicators that I did like for some reason, and trying to find patterns within price using those indicators, and then building rules around that, as Mike kind of explains in the book, One Good Trade. So then I saw that there was potential for me to build this on my own. And now, you already kind of know my personality. If I'm going to get into trading, knowing that most people can't do it, I'm not going to think that I can't build a strategy. I'm going to think I'm going to build the best strategy. My ego at 19 was like, I could do this, I could do this, I could do this. So it was just like kind of default almost to build my own rather than keep searching for someone else's. Because if someone else could build one that worked for them, why couldn't I just build one that worked for me?
That's interesting because I've not heard many people do it from the start in the trading journey. It's for some people to like years to be able to get there, and that's a big difference.
I was about 12 to 18 months in. So it was about a year. It was about a year. And that was a year, yeah, a year of like literally, bro, I was funding Traders Way accounts with $100, all of the $100 on one trade. Like I had no structure that first 6 months to a year. But as I continued to study, then I started to see. And then, like I said, Mike's book and a couple other things that got me thinking, just find this strategy, see if we can build some rules. And that, like, I'm always a numbers guy. If you ask any of my friends or family, like, I'm always about probabilities. I'm always about the data. I love the numbers, right? So to me, it was like, if I could just verify this for myself, everybody else has an opinion about day trading. You're on social media, everybody thinks that they know everything or that their opinion is right. So I was like, let me just build something for myself where the data doesn't lie. And I know that this works. I don't have to trust anybody else because, like I said, numbers don't lie, you know?
Good point. Good point. Now, what happened from there? So you have your own strategy. You kind of start to trade it. Did you go straight from there successful, or do you have any kind of challenges to overcome? How did that go from there?
Definitely. A lot of challenges at first because I think one of the biggest ones, and I'm sure I've been listening to your interviews now, like I told you, since 2017, 2018, and you come across this with a bunch of people. Self sabotage ruins traders. We get in our own way all the time. So I didn't realize that at first. So while my technical analysis may have been good enough, my psychology was not nearly where it needed to be in order to be able to be consistent. And I think part of being consistent in trading, when you first say that to a new trader, that tells them in their brain that they're going to make money every day. But being consistent as a day trader does not mean you are going to make money every day or every month or even every year. Being consistent means you show up, you follow your rules, even when you're in the down periods. And that took me a long time to understand because every time I'd get into a period of drawdown or take consecutive losses, I'd be pissed at myself and I would end up just taking it out on the market. So that self sabotage set up tons of hurdles for me in the beginning that I feel like hopefully now through people like yourself and me, a lot of these new guys, they don't have to go through as long of a period of pain as I went through. But I think other than the psychology side, the technical side, I felt like I had a good grasp on because a lot, if not 90% of the courses that I watched were all technical analysis. Very few people were educating on the psychology. So that was something I just had to learn for myself. But I think if you go deeper than YouTube videos and you go deeper than courses, you can find that psychology because there's, as you know, many great traders. Your most popular video on your channel is with an interview with a guy that I never knew before you interviewed him. And he's an amazing trader, Ray, right? That's his name, Ray. Yeah. So I think there's plenty of other resources out there to learn the psychology side. But as a new trader, I didn't want that. I thought all the answers were in the chart. You know what I'm saying? And they're not.
Like that's a tough stage to move from. Like where you think that it's just about a strategy. If you can improve your strategy, improve your edge, find a better entry, like tweak it, make it better, that you'll be successful forever after. And it's a trap that people fall into a lot. So how do you know when you have an issue with psychology compared to an issue with your actual strategy?
I would think self-awareness. So part of my journey, I would say my trading in the last 4 years was much better, of course, than it was in the first 3 years. But a big part of that is probably because I've done a lot of mindfulness work, which the mindfulness work outside of trading, I think has transformed into beneficial characteristics that show in my trading, increasing my patience, increasing my discipline. And I think when like mindfulness stuff to me, meditation every day, I've been doing yoga for longer than trading, but I actually got my yoga teacher certification last year. So doing things like that really push me to be a student, be an amateur, learn something new, mindfulness, breath work, all of these things I am an amateur in. But they have made a direct impact in helping me see myself, I think, better. And then by understanding my own strengths and my own weaknesses, that's where you can then say, yeah, my strength may be in my technical analysis, but I know that I'm not thinking how I want to be thinking when I'm trading. Something's going on. I'm emotional. I'm flip flopping. Without awareness, you don't even realize that you're buying Bitcoin and selling Bitcoin on the same day because you're just lost in the technicals. You know what I'm saying?
Totally, yeah, yeah, totally makes sense.
Yeah. So I think that was where I was like, okay, I'm not so much lost in the technicals because I'm bad at technical analysis. I'm lost in the technicals because my head is all over the place. Why am I buying and selling the same thing every day? Why am I chasing the momentum on things that I don't even trade? And all of a sudden, I'm trading GBP CHF and I don't even look at that. Those things I started to like, it's almost like a flashlight was showing me my weaknesses as I pushed myself down that mindfulness path more through yoga, through meditation, and things like that. Which to some people listening, they're going to be like, "That's so corny, bro. I ain't doing that stuff," you know. But for me, it made a big difference. So I only can share what helped me. Nothing else came into my life at that point that would have been like the mental thing. It's not like I had brain surgery and got a brand new. Nothing happened other than pushing myself outside of my trading to be my best self. Because I'm sure you'll agree with me on this. Your trading self is a direct reflection of your everyday self. So if you're out in the world and the characteristics that you exhibit do not align with successful trading, there's no way you're going to be able to come in and trade well. But if you can align yourself off the charts with the good behavior that you need to be good on the charts, I think that's where you find the sweet spot. You know what I mean?
That's a great advice. And at the same time, there's people who are gonna know like what their mistakes are, like what cycles they're stuck in, but they're not able to get out of them. Like they know they always do this mistake when they trade. They know they always have these emotions coming up and they fall for them when they trade, but they don't see how to get out of it. So what would you tell these people to focus on to get out of these kind of cycles or like get unstuck from there?
Great follow-up question. You do a great job with the questions, bro. The answer would be journal all of your trades. What held me back for a long time in the results in the P&L was that I would be building my first strategy, was called the A1, and we're looking for the A1 entry, and I might see two of them present that day, and I take them, and let's just say on this day they were both winners. Then there's other trade ideas that I have, and because I'm egotistical, because I'm whatever I am, I think I'm always right. I'm still taking those trade ideas, even though they're off my system, off this strategy I'm building, right? Then at the end of the day, because I'm not tracking all of those trades properly, I can just say, hey, I had two wins today, and then that other thing I did, just I won't do that again. Don't worry about it. And then it never gets talked about again. The mistake, the chasing the trade, the extra stuff you never gets, and then it's like re-ingraining these bad habits into you by not taking accountability for your actions. So if you're in that point of like, I'm trying to figure out where my issue is, just start tracking everything. And I mean on the charts and off the charts. So like part of my report card that I do every day is it has a 15 section checklist for trading errors if I was to make any of those trading errors each day. I traded too small, I traded too large, I got in too late, I got in too early, I traded into news, all of those things. If you didn't do any of that, that's great. That's a good day. Then you should also be tracking your on the charts habits, the things that you need to do when you're at the desk to be your best self. Again, I have to do 5 playbooks. I have to generate 5 new trade ideas. I have to X, Y, and Z, whatever. I want to watch an hour of educational videos for trading, whatever it is, or podcasts. Those on the charts habits that some days we just slack off on. But if you have a checklist and a little accountability with your maybe your community and stuff like that, then it's a lot more annoying at the end of the week when you look back on it and you say, "Oh, I'm not meditating as much as I thought." You know? So along with the on the chart stuff, tracking the off the charts, working out, spending time with family, doing the mindfulness practice, all of that stuff should be tracked too. Diet, sleep, because like again, as this is something that has become very clear. This is not a amateur's game. If you treat trading like a hobby, you get poor results. But if you treat it like you're LeBron James playing in the NBA finals, you will get better results. So I think I look at myself like a high performance athlete. I need to get enough sleep. I need to be eating right because this is the machine, bro. And if you put bad gasoline into the machine, the output is going to suck. It's not going to go the way it's supposed to go. So that's why tracking the stuff even off the charts makes a big difference too, because then you can see what areas of your life do you actually maybe need to make some improvements in that could then, without even doing anything else, just maybe start eating better and stop eating late at night, drink more water, simple things like that. All of a sudden, you start thinking a little bit more clearly. Here's another direct example I can give. I haven't had coffee in like 2 weeks, bro. I normally was coffee first thing in the morning, but I've cut it out now just with salt in my water and electrolytes. And I'm still going to the bathroom fine. Everything still works fine. I'm not having any crash from caffeine, but I'm noticing that I don't feel as jittery, of course, and as like anxious at the desk where I'm consuming coffee first thing in the morning and then I come to trade, I'm like wired, bro. You're like ready to go. But with the water, I'm noticing just the clarity of thought, the less erratic thought patterns and emotional patterns. So then you can get real into it when you're tracking everything and start to tweak it. Like let's take coffee out of the equation. Let's try to do fasting and see what we get from there. Let's try to up the amount of playbooks that we do. If I do 10 playbooks a day, of new trade ideas, could I end up coming up with a new strategy or a tweak to my strategy sooner? Of course. So I think it's tracking your trading errors, your off the charts, and your on the charts habits, and then see where you're actually weak. But a lot of people, they'll build the spreadsheet, they'll do all that, and as you probably would agree, you'll know, they will lie to themselves. You're not even lying to me. You're lying to yourself, you know? If you, oh, I didn't meditate today, but you still check the box. No. You've got to be honest with yourself, which I think for a lot of people, that's what mindfulness is. Mindfulness is being honest with yourself. So it's like, how do you get to that point to not to be willing to understand that you need that? You know, bro, some guys are like, man, I don't need that. I don't need that. No, we all need that. That's part of being a human being, but you just don't want to accept it yet. And it's holding you back. That's how I really feel.
Especially when you're performing like really well, you have a really good run. It's so easy to not do these things, to like push them aside and like forget these parts, and then you go back to that cycle of like not performing well again. Then you have to go to do it again, or you just like stay in a cycle for a while. So it's definitely some habits you want to keep up. Now, do you have a kind of format? Is it like just like a sheet you build for yourself, or do you have like a format to do it, or how do you keep track of your things?
Yeah, so how I track everything. I work with a guy, his name is Tom. Tom built this amazing, we call it a trader improvement workbook. It's something that he and I use in our private coaching. We have a mentorship group where we take 15 traders every 12 weeks. We do it 3 times a year, and we work very closely with them, trade with them every day, coach them once per week on private calls. They have the entire trader improvement workbook to work through. And in that workbook is where they track, and we track all of our information. So it's pre-built for you. It's amazing. Tom is very from his previous career. He is extremely talented in Excel. So the way he did it was you have a daily report card, 5 of them each day for the 12 weeks that you're in the program. And then each week, there is a weekly review that takes all the information that you filled out Monday, Tuesday, Wednesday, Thursday, and puts it into a summary. Hey, on Monday and Tuesday, you traded too small. Tuesday and Thursday, Friday, you got in too late. On Tuesday, Wednesday, Thursday, you didn't work out or spend time with your wife, bro. No wonder you had a rough week because you didn't do those things that make you happy. So it's like being able to then summarize the entire day by day in a weekly format is fantastic. It has the P&L at the top. It kind of automates all of that. And then it prompts us to ask ourselves really good questions. How much did I cost my trading business this week by missing trades or getting out of trades too soon? Like with my actions, how much did I cost myself? How much money was left on the table? Another really good question is what could I have done to make more or lose less on that specific day? That's a great question, no matter whether you won or lost. What could I have done to make more or lose less? Another easy one is just trade of the week, worst trade of the week, best trade and worst trade. See that because then you do that every week. 4 weeks go by, you have a month of data, and you can say, let me look at the 4 worst trades I took each week. What pattern do you see among those 4? Okay, now I know I'm not going to go near that. For me, it's been Forex pairs. I am originally I started trading Forex. Now all I really trade is Bitcoin and the major indices, the 3 major indices. I don't know why. Just can't give you an exact reason why I'm not trading Forex pairs as well. Maybe market conditions have changed. I'm not a market maker, so I'm not going to say that's definitely it. I don't say definites because I don't know. But I can tell you by tracking everything, I do know when things start working and when things stop working. So then when I see all of my losses are coming from Forex pairs, I can stop trading them with no thought of, "Ah, is that a good idea?" No, it's a great idea because it's been costing me money the last 2 weeks or last month or whatever it is. You know what I mean?
How would you monitor these pairs to stop trading? Do you kind of get back to them after some time? Do you see how you perform on these pair again, or do you just like put them aside and never go back to them?
I'm biased right now because I think it's a fundamental issue of like there's not as much trend in certain markets, and I'm a trending trader. I'm not a counter trend guy. So I think because there's now it seems a little bit more volatility, and I just have an easier read on the day-to-day trend because I am always on Twitter like you. I'm feeling out CNBC and the news. I feel like I read the trend better on the indices than I do on Forex pairs right now. And that doesn't mean that there's not winning entries for my systems in those Forex pairs. Like my guy I just mentioned, Tom, had a great short entry on GCAD this morning, right? That's a, that money is still there. But because of my tracking, I've justified it to myself that it's just not my money right now. That's great that it's his. We still want to document that, still collect that data, win or loss. We still want the data, but it's more about I live by this saying. You'll like this. It's do less, do it better, do it bigger. So when I try to do too much, I lose money. When I try to do things that are out of my comfort zone, I lose money. But when I do less, trade less pairs, trade less entry signals, focus in on what's working, I do better. And then the do better part of the sentence is just get good at trading those setups that you're doing less of and then get bigger in them. As you know, capital is really what determines your success in trading. You try to trade with a $100 account, it's going to be a tough go. But if you can gain the capital, whether it's through a funding company, a prop firm, private money, whatever, income from your job, whatever, you really have to see the first two sentences as being more important. The capital is easy to get. Now it's about knowing how to do it less, knowing what to do less of, and knowing what to do it, how to do it better. You know what I mean?
Interesting. So we'll get back to capital later for sure, because that's a big topic we can talk about for a long time. But tell me kind of on a day to day what that looks like. Like what kind of assets do you trade? How many trades do you take? What is kind of like your trading style, your go to, and how does that look like?
Sure. So day to day, I'm up around 6 o'clock, maybe a little bit earlier, New York time. I'll wake up, come onto Discord, see what's going on. Like this morning, Bitcoin's down almost 8%. So like on a day like today, I'm probably done trading. It's a Friday. I'm up this week for my two trades on Monday and Tuesday. So I'm not going to come in and be over aggressive, but I still will wake up. I'll work through my five main things, which is Bitcoin, US 500, US 30, NASDAQ, US 100, and US oil. Those are the things that I'm trading the best right now based on my last 2 months of performance. So I'll look at those and I'll see if there's some type of clear trend. One of the indicators that I use moving averages like most people, but I have it's called a Traders Dynamic Index. It's a TDI. It has an RSI on the bottom, but the RSI also has a moving average applied to it, which has been back tested for us and shown that it's a really good indicator of market sentiment. It's actually an indicator that was created by Dean Malone. He has a company, he's an older guy. That one indicator has helped me really understand trend more than anything else. So if I can find good market sentiment, I'm going to stay at the desk that morning and I'm going to like get locked in to try to find a trade between 6 a.m. and 9 a.m. From 9 to 9:30, right before New York market open, I'm normally flat. If not, stop loss is locked because that's that extra volatility that we'll see at the open that sometimes I'll just tag you out like it did earlier this week. It tagged me out on the open on Bitcoin and then it dropped from 9:30 into 11:30. So sometimes you just have your stop locked, you get tagged and you keep moving. And then I'll go work out. I normally work out around 12 o'clock. So I'm off the desk from like 10 to 1 ish, have maybe some breakfast, hang out with my wife, and then gym. After gym, normally I'm back at the desk by 2 o'clock for calls, whether it's coaching calls, something for our business, or just looking at trading. I'm back at the desk from like 2 to 4, 2 to 5, and then I'm done. 5 o'clock, I'm checking out. Might go play FIFA, might go to the pool because I live in Florida, so it's nice all year. So something like that. 4 or 5 o'clock, I try to be done. And then there's some days where I'm sure you, as you do as well, you enjoy the privilege of being a trader where it's like, I don't want to do anything on that Thursday. I'm blocking off the whole day and I'm going on the boat. For you, I'm going to I'm be traveling that day. So I'm not going to be doing anything. So I have those days as well. But like the typical flow is come in, look at those five major markets, see if there's trend, try to trade pre-market. If not, wait till after market open. And then I come in after New York session opens, 9:30, 10 o'clock, and I look for trades. I have the guys that I work with, they trade the London session. I used to wake up at 3, 4 in the morning to try to do that, bro, but I'm getting old now. You know, I know you can't tell under all this dark hair. There's some grays in here, bro. There's some grays in here. So I have to adjust as my lifestyle adjusts. I have a lot of friends here. I have a lot of stuff going on here. So to be able to trade the New York session is much better for me now than it used to be.
This is really cool for two reasons. First of all, because you have probably like a really fulfilling life and you can do a bunch of other stuff on the side of trading, which is really good. And also trading is like really time efficient for you. It's not like something like you look at a chart 8 hours a day, they're like all the time finding trades. You trade when you know you have an edge, when it works for you. Then you just do something else when that's it.
Exactly. I bounce. And I miss out on a lot of big moves, bro. The swing traders that are holding trades for multiple days that can keep money in the market, they catch way bigger moves than me. I'm like Derek Jeter. I'm hitting singles, I'm getting on base more times than not. I'm getting my 1R, I'm getting 2R, locking my stop, and I'm not giving back. My win rate over the last 2 months is almost 80%, but my risk reward is just under 1. So I'm getting that consistent win. I'm getting to that 1R. Of course, I'd still like my average winner and average loser to be a little bit more separate. They're a little too close, but that's always something I've been working on. So for me, it's like get in, get my money, get out. Get in, get my money, get out. And that's because I have confidence that this takes experience, but you know this too. The markets are not going anywhere. I could wake up in a month from now and just keep trying. I could take a month off. They're not going to care. I could take a year off. They're not going to care. So it's like for me, if there's nothing today, cool. See you tomorrow. Find something tomorrow. I'm not on a time crunch. I have the capital. I have everything I need. So I can take my time finding, like you said, that edge, sniping my edge.
This is cool. So very few people talk about the fact like you can have a reward to risk that's below one, basically. So like a negative reward to risk. So you risk more, but you win less. So a lot of people, like if you like read in the books and the common trading advice, you'll hear, oh, you have to have like a big reward to risk, like 2 to 1, 3 to 1. So tell us about like that opposite side of having a negative reward to risk, how that turns out, and kind of how you do it and why you prefer that.
Sure. So the why I prefer it is because I don't like to lose. When you look at when I've gone off tilt, it's when I take losses. But if I'm winning, even if there's small wins, I don't get greedy. I don't overtrade. I don't keep myself at the desk longer than I need to be. So that's the reason why I am cool with trading this way. And my strategy through the back testing has proven year on year that it is a high win rate, 70-ish% win rate strategy. James, the other guy I work with, 81% over the last couple of months. So it can be a very high win rate strategy. So that's two parts. If it is a high win rate, you don't need 3R. That's just basic math, everybody. If you have a high win rate strategy, you can get 1R on all your trades and you will be profitable. I'm not, like I said, I'm not here to post on Instagram and be like, hey guys, I got a 10R trade. It's sick, because I don't care. I would rather have my 1R be worth more than your 10R, and I'm in and out faster than you. I'm, like you said, I'm focused on why I got into trading, to be efficient with my time and have control over my life, because we're going to all die. And I don't want to die or be on my deathbed and be like, damn, I spent a lot of time at the desk. I probably should have gone outside more. You know what I'm saying? So I'm very like focused on that all the time. So that's why I trade this way. The reason the numbers look the way they do, where my risk reward is slightly under one, is because let's say I'm risking 0.5% on a trade. The trade goes 1R. Some of my trades, because they're still like good setups, I'll only take 50% of the trade off at 1R. But because maybe I'm near market open, it ends up stopping me out at profit, because when I get to 1R, I'm locking my stop most of the time. So then I only got 50% off, which is a 0.25% gain, and the rest of it got stopped out. So I risked zero point 0.5. I only made 0.25, which doesn't sound great, but that's because of my trade management strategy, which goes back to the first point of I just prevent myself from losing. I prevent myself from closing any at 0.25 and then taking full stop on the rest of that. That is annoying. And Peter Brandt talks about that all the time. Popcorn trades. You go up 5R and you only end up with 1R. That will drive me up a wall. So I'd rather just take my small little win. Oh, the other day I risked 0.15, I pulled 0.13. It's small little wins, but they compound over time. And when you have big capital, 0.5% can still be good money, you know?
I think it's a mindset that's hard to get out of for most like new traders who think, well, like they look at a chart, they take a big move, or that could have been like a 5 hour trade, then they get crazy about it. But you need to be able to accept less than that sometimes and still be okay with it, and kind of try to go with it for a long term.
If you force yourself if you try to force your way through the market, what does the market do? Smacks you in the face. You know what I'm saying? Every time. Whereas if you just say, hey, this is a nice rip, stop loss is locked, let's see what it can do. Oh, it's still moving. Oh, it's still moving. It's a very reactive approach to trading, not proactive. Not, it went 2R, get full out of the trade. We got the bottom, boys. No, what if it wants to go 7R? Keep a piece on, lock your stop, mitigate risk, enjoy that trade, you know, because then you can maximize those. So there'll be the example of I risk 0.5, I get stopped at even, only closed half, I make 0.25, that's fine. There will be the trade where I risk zero point 0.5 and I'm 90% out of the trade at 1R. And then it ends up falling with that rest of the 10%, 6R. And I make a little bit more than what I risked. You know what I'm saying? But because it's a high win rate strategy, the math still works. And some people will not like that. That's fine. Some people are, I always think of Paul Tudor Jones. You know, Paul Tudor Jones is the asymmetric risk. He takes 6 losses for that one big win. He doesn't care. He can take that. With my active trading, I can't do that. Maybe if I was an investor over the long term and stuff, I could understand that. But with active trading, it just will wear, at least for me, losses just wear away at me mentally. So I just prevent them.
That's a good point. That's definitely a good point. It's all about understanding yourself, knowing what you do, when you perform best, and then doing that.
Because I'm not trying to be the best trader in the world, bro. Ever. It's never been my goal. I don't care. I'm just trying to make enough money and grow my business to the point where me and the people that I employ can be financially independent, not tied to some mainstream job, not tied to some mainstream system. You know, my wife does not have a job. I'm very grateful that I'm able to provide for her and our family. Like, those are the things that are important to me. Being the guy that had the best percentage return like Mark Minaviri, it's amazing. All credit to Mark, but I don't care. You know what I'm saying? It just doesn't matter.
So let's discuss a bit more about capital, because you mentioned a few times capital is so crucial for good trading to be able to, of course, pay your bills and make money from it. And I noticed you got funded by my Forex fund recently. You got, I think, two accounts with them now. But tell us, is it like the main way you recommend people to get funding? Is it through prop firms, or is it like on your own capital? And what you recommend to be able to grow that capital more over time?
I enjoy my Forex funds because I like when I can connect with someone that works at the company and like they know me and I know them, and it's like it just makes it feel a little more personal. So I had two guys from the company that I had connected with, and I had James, who's a guy that has been funded with FTMO for a year and a half, and then he was also funded with my Forex funds for about a year since they basically came out. So he was always pushing me because I trade with him every day, and he's like, "Bro, they're paying out in crypto. They give you more options to trade, like Bitcoin and the indices." I had never traded Bitcoin and indices prior to 2 years ago. So he was like, "Bro, there's new markets, new opportunity. Just come try it." I was closed minded for a long time to it. But then when I realized that I just didn't want to become like the old man that just traded Forex, it was an amazing opportunity, especially like I get on calls every day with new traders, and I do push them to say, if you are thinking of trading with anything less than 50 grand, think about getting funded before you go and put 50 grand in the market. It's just risk versus reward. Before you go and take your first endeavor into trading and potentially lose money, first thing I say, if you're going to trade private capital, let's say you wanted to put 50K in there, put 25 in. Start with 25. If you do well, get it to 30, then add some more. If you go from 25 to 20, we should back up, because I've had many people come to me. I started with 20, now I'm down to 9. I don't know what to do. Well, let's prevent that, right? Start with half of what you thought you should start with, and then grow, add to it. You can always add. You can't get that money back though. If you want to go your private funding route, that's the way that I would recommend, half. But the funding companies, the big intimidator is the challenge, right? Everybody's like, I got to make the challenge. I was like against it at first because I understand the idea, like good traders don't have to make 8% or 10% in a month to be a good trader. Last month, I was only up 4.5%. That can still be good numbers. But if you fail, you'll fail the challenge if you're only up 4.5%. You know what I'm saying? So I felt as though at first the challenges would be a roadblock. But then after going through them myself, I was like, no, I think this is actually good. Put yourself under some pressure. Maybe not at first. Of course, education first, demo trade if you're new a little bit first. Get your feet wet. Don't go in there totally new, but go in there and feel some pressure, feel some competition, boys. This is good for you. Don't run from the, "Oh, I don't know if I can do it." Okay, flip that around. You can do it. It's just a matter of when. That's what I tell people, because, like I said, it is unrealistic to think you're going to have an 8% return every month in your first couple of years of trading, for sure. So to think you picked the right month where you're going to hit the 8 or 10% month on the same month where you bought the challenge is a little bit naive. It's going to take some time. But the great thing is they all give you free retries. As long as you're profitable and you don't break the rules, take the free retry. Like, again, you finish up 4.5%. Any one of us that has been in the game for a couple of years would be like, "Bro, great month. It's a great month." Anybody that wants to have money in the game would love a 4% per month return. But the funding companies will say you failed. So you have to just kind of disassociate from that and say, I'm going to trade well. I'm going to do my best trading. I'm going to learn how to trade a little bit under this pressure and see what it does. See if it can mold me. Diamonds are made under pressure, like it molds you into something great. So I think the pressure can be a good thing with the right perspective. And because the reward is so great, it's worth the risk. $500 for 100K. Come on, bro. Come on. Like, people don't understand. And again, everybody's with your audience. I know they're all over the world, but in the States, let's say you wanted to have $1 million in a trading account. People forget you have to make that money and then pay taxes on, especially if you run your own business, you have to pay tax on that money and then get the money into the trading account. And then when you take money out, you're paying tax again. That's how America gets you. It's the double taxation. So do you really want to do that with your own money at risk too? Or just take the private contractor, take the profit split, scale up to 1 million or 2 million in funding capital, and just take paychecks as a contractor, which you can then have a business in America. You can have a business with write-offs that go against that income as a contractor, and then you can lower your tax bill completely. There's so many pros to it that it's ignorant to be like, nah, I don't need that funding company stuff. And I was that guy. So that's why I can say that. Don't be like that.
Yeah, definitely a good point. And the cool thing is there are prop firms for all kinds of trading too. Like in the beginning, it was only FTMO with like only day trading specifically. Now it's open to a bit more different trading styles. That's a good thing, of course. Now, tell me about, for a trader who does that, there's a pressure every month to not just reach a minimum like income, but there's a pressure to not hit the maximum drawdown on the account. How do you handle that kind of pressure from the drawdown?
I have never had a problem with that because I don't ever risk more than 1% on a single trade, and 1% is rare. If I'm in at 1%, like something's going down, bro. You know what I'm saying? Most of my trades are 0.25 to 0.75% risk. If you're taking that controlled risk and you're not taking 17 trades a day, you'll never even come close. Like I've never had a problem with there. I think it's 5% daily, 12% max. Never ever will even come close to that. So controlling your position size is the first way to do that, but you can only be confident to take smaller. People will hear me trade that percentage and they'll be like, that's so small. You only will be confident to do that if you backtest your system like I have, and you know that entries are going to present almost every day. And then if entries are presenting every day in a high win rate strategy, you don't need to put 2% on one trade, because what if there is a period of eight, like in one GBP USD backtesting of my A1 entry, 8 losses in a row. Imagine if you just started trading the strategy right at loss number 1. You would have left the strategy before you got to loss number 8. But if you have good position sizing, you would have been around for after that, when there was 17 wins and 3 losses right after that. You know what I'm saying? So I think with proper position size, you give yourself the time to let the data of your trading strategy play out. Because in a trading strategy, I look at every trade as a data point on a plot. You can't choose which data point you should put more risk on, other than to a small degree of probability, where high probability trades get a little bit more than low probability. But to put a big chunk of the account on any one data point is just gambling. That's all that is. So I think if you're controlling your risk and using stop losses, taking your losses and not moving those stop losses, you should be okay not getting too close to the drawdown rule. I think they give you plenty of space. No one that I'm working with is complaining about the drawdown rule. The guys that I know that have gotten funded in our group, no one has ever been like, man, I was close to drawdown and then I fucking went all in and got it done. You know what I'm saying? Like that never happens.
No, it's a good point. So it's all the risk management, of course, and being able to handle that too. So for sure.
Yeah. And you made a good point about the different types of prop firms now. So many different top there, and it's only a matter of time until they're going to offer $1 million account, pay for that, $2 million account, pay for that. Like it's the competition amongst them is going to make it better for us. And there's options prop firms now where you can trade options with prop firms. And I mean, you can do equities with a lot of these guys. So there's so many different markets. It's like this is like a whole new frontier for day traders almost, because now anybody who even maybe never even thought about day trading could get into it. And now that they have the ability to get that capital, it seems more appealing to them than before. When before they were like, dude, I'm from Louisiana. I'm never gonna have 500 grand to trade with, bro. I make $65,000 a year and I can't save that much because inflation. Right. Now you can get around that. Now you don't even have to worry about putting your own money in the market. Take your payouts, take them however you want, and put that money into the market if you'd like for yourself, with your profit splits. But you don't have to take that overbearing front end risk like we used to have to do back in the day, us old heads, right?
Yeah. The sad thing about platforms, there's gonna be guys, like a couple of people who take challenges after challenges. They keep taking one, they lose it. They keep taking another one, they lose it. Kind of like almost like gambling. So what do we tell people to focus on if they keep failing at platforms? What do you have to kind of change or adapt to be able to pass a platform challenge?
They say that the definition of insanity is doing the same thing over and over again and expecting different results, right? So if you fail multiple challenges and you're failing them like you're breaking a rule, you got to step back. The first thing to do anytime you take a big loss, anytime you make a tough mistake, step back. Call it a week, call it a month, whatever you need to do. Call it a day sometimes, but step back and refocus. I like to try to see myself from the third person perspective. Where are we right now? Am I headed in the direction that I want to go? If these repeated funding challenges are stopping you, you need to intake some type of new information or you will keep repeating. So I think what ends up happening is people think that they know enough about trading and then they stop learning and just start trading. Whereas if you come at it from a point of, I'm always a student, I'll learn from you, I'll learn from the new guy, I'll learn from everybody, you can actually survive. I think I was watching one of your videos last night, and that was what one of the guys was saying recently. I think it was one of your recent videos. He was just saying survive, like just staying alive is one of the biggest keys. I interviewed a guy yesterday for my podcast. We'll have to bring you on my podcast next. He's a prop trader in South Africa, and that's what he was saying. He's been trading with this firm since for 11 years, 12 years, and he said he was like traders ruin themselves because they tried to their ego comes out one day and it can ruin them and then they never trade again sometimes. Whereas if you can just be in this survival mindset, of like, I want to learn and survive. I got to learn new things and survive. Like I did, learn new markets, get in with the prop firms. That keeps me alive. If I had never done that and I was still just trading Forex right now, I might be running my head into a wall. You know what I'm saying? Like wanting to break something. So if you're always learning and you're always taking in new information, it's keeping you in that survival mindset of like, I'm trying to be humble and survive, then I think you can eventually pass. But if you like watch one course or you think you have like the one indicator that you want to use and you keep trying to use this indicator, like you're trying to trade something with a Bollinger Band or something or an EMA cross and it's not working, there's a reason for that. It's too simple. People have to understand like real systematic trading is so rules based and those rules should be questioned and tweaked or challenged, I should say, often. People don't want to do that work. They don't want to do the accountability stuff that I was talking about, tracking everything. They don't want to do the back testing. They don't want to question themselves. They want it to be one indicator, one thing, and then we make money. And it's just not like that. So for those people who lack a true passion for self-growth, because that's what trading is to me, it's an endeavor to make yourself better, really. If you don't have that passion and you're just here to make money, just leave. Like I honestly, I tell some people that I'm like, just stop right now. It's just not a good time for you. You're trying to tell me you're already thinking about your first funding payout and how it's going to pay rent for you next month, but you just started trading 2 months ago. Like, no, bro, it's just that's not the right decision for you right now. I think sometimes that's a hasty decision because you want money. But trading, as you know, it's not something you should come to when you want to pay rent or when you want to make money. Trading is something to grow wealth, be it's to be done in a proper process. Like I said, very rules based, very analytical, not gambling. If you want to just make that money, go to the casino. It will faster for you whether you win or lose if you just go to the casino, you know?
That's a very good point for sure. Now, do you do backtesting on a like monthly basis? Do you do it all the time, or is it like how often do you go back to do your backtest for your strategy now?
So I have right now, we have the A1, the D1, and the D2. Those are the names that we give for the entry signals. Those have a lot of back testing that have gone into them, and they're still being back tested by some of the guys in our group. But right now, I'm actually working on a new strategy called the A2, and that's what I'm back testing. So day to day, I'm gathering all of the entries that present. We have an indicator that we're using to document those entries. Stop loss rules are set. Same checklist is used. So all of the entries are getting gathered right now. We're in the process of trying to work with someone that's going to help us backtest in Python too. So we're in the process of like gathering data and then backtesting this as well to get some concrete numbers behind it, if you would. But on the day to day, I'm doing playbooks, trade ideas, even trades that I don't take, and gathering that data. Now, of course, when you're doing manual back testing by hand, there's going to be human error. You're going to miss entries. You're going to blah, blah, blah. But when you're doing a back test, you could do a back test specifically on Bitcoin and the indices. And if I'm looking at those and I see every day what entries present, you could do pretty good with manual back testing, day to day. And then what I like to do is I'll do back tests, I'll do chart markups and trade ideas over the month. Then I'll take all of those markups, organize them into a folder, and then from that folder is when I'll move them into my backtesting spreadsheet where I put in the entry price, the stop out price or the take profit price, the time, what entry it was, what grade we gave it, all of that data. Because then the backtesting spreadsheet will tell me, hey, you're trading these, let's say these A1 entries, the trades between 6 and 8 a.m., they're winning at 30%. But between 8 and 10 a.m., they're winning at 70%. You know what I'm saying? So I'll kind of do the markups over the month and then go month to month with the back testing as needed. But right now, really focused on this new strategy, which takes a lot of work, as you know.
So I know we covered a lot here. I know we went through a lot of different topics, and you gave a lot of advice for listeners here. Of course, they're going to love it for sure. But we'll let us know your comment in the comment section below, for sure. Let us know what you think. Your favorite advice for this interview with Austin, and what can they find you if they want to connect with you or reach out after the interview, Austin?
Yeah, Austin Silver FX. Make sure you guys, if you do want to reach out and follow me, don't follow one of those fake accounts because I swear I have the most fake accounts of any trader ever. It is ridiculous. So just make sure you follow the right me or just go to asfx.biz. That's my website, asfx.biz.
I'll put some links below for your YouTube channel, your Instagram, and other websites too that they can reach out to you there. So
Awesome.
that'll be cool, of course. Yeah, you give out a lot of content there, so people can follow you, especially on Twitter. I know you give out a lot of content there, and on Instagram as well, YouTube the same. So for sure, people can connect with you there. They can reach out, and look forward to catch up with you in the future for sure. See how that's been going out with your new strategy, of course.
Thank you, brother. Thank you for having me on. And until next time.